If you're looking to buy a car, or maybe even been turned down trying to buy a car, and you have rough credit. Let's face it, life happens, things happen, and you've got to get back on the road to rebuild and reestablish. Here's some tips on what it's going to take to get approved. First question, are you working and do you have a source of income coming in? That's going to be an absolute requirement. Keep in mind that most banks will not accept temporary services even if you've worked there for a long time. They also don't consider things like unemployment benefits. So for the most part, you're going to have a W-2, a 1099, a pay statement, and if you do get paid under the table, make sure that you deposit your money into a checking account, even if you just put it in and take it right back out, because you have to have some kind of paper trail to show the income coming in. So the second question is, when you add up all of your income for the month, do you make an average of at least $2,000 a month? And this is gross income, so before taxes, before you pay for insurance, before your 401k deductions, anything like that, your gross pay, at least $2,000 a month. Now there are a couple of lenders that will go down less than that. Some will go to $1,500 a month, but that's pretty much the bare minimum that they're going to look for as far as income. If your income is less than $1,500 a month, most likely you're going to need a cosigner or need to get some more income before you're able to qualify for a loan on your own. And the third question I always ask is sort of a two-part. First, do you have a trade-in? If you have a vehicle that you can trade in, even if it's an old junker that's maybe only worth $500, the banks in most cases are going to give you credit when they consider your approval if you currently have a vehicle, because they know you're relying on having transportation currently, so you'll need to make the payments on your new vehicle so that you have transportation to get to where you need to go. Second part of this is, if you had to, could you come up with $500 or $1,000 to put down? When you've had some bumps in the road with credit, not judging, it's just a riskier loan. The bank's looking at their risk. If you can show $500 or $1,000 down, oftentimes that's the difference between an approval and a turn down, because the bank sees that you have the resources to come up with the down payment, so they feel comfortable that you'll be able to make the monthly payments. The other thing it does is cover your taxes. Think about it, if you buy a vehicle and you put no money down, you're not only financing the vehicle, but you're also financing your taxes and any related fees that you have in your state. So the bank doesn't want to finance the car plus the taxes plus the fees. So if you can come up with that $1,000 down to offset part of that cost, where they're only financing the vehicle, you're in a much stronger position to get approved. So based off these three questions, I can get a pretty good idea of the likelihood of an approval for somebody. It doesn't cover every single scenario, so keep in mind your situation might be different, but it's a good general guideline to see whether you'd be able to get approved and hopefully make you feel a little more comfortable before you go into the dealership. I hope you find this information helpful. If you're in the process of buying a car and you need a second opinion or need some advice or